Hello, everybody. Adam Parks here with another episode of Receivables Roundtable. Today, I am here with my longtime friend, Mr. Charlie Bonner, who is now with NCB Management Services, but has spent a lot of time on the banking side, the debt buying side, the FinTech side, and just a wealth of knowledge for us today. Charlie, how's it going? How you been?
Good, Adam. Thank you for having me on. I really appreciate it.
Absolutely. So for anybody who's not familiar with you, and I'm sure there's not that many that are watching, could you tell everybody a little bit about yourself and how you got to the seat that you're in today?
Sure. Yeah, I started out, it's been a while. I started out in 1990, actually at a company called MBNA. So folks don't know it's now the Bank of America. So that's where I kind of cut my teeth and learned the business, and then progressed through Adam through Citicorp. I was there for several years in finance, and then I worked my way up through which called the bunch of mergers. Chevy Chase, First USA, Bank One, JP Morgan. So I spent about 14 years at JP Morgan, which is where I met you.
Yep.
Gosh, Adam, I think that was what, 14 years ago or so, roughly, when we first met.
Range.
Yeah, so it was good. That was good. We've both grown up in this industry. And then recently, I just left Mercury Financial, and I was there for almost 5 years to start up that FinTech in the recovery department. So I've gone from an agent clear up until I've joined NCB this past February. I was pretty excited the opportunity to join the ARM industry leader. So that's where I sit now as a chief acquisition officer.
Well, that's fantastic. And clearly you have the experience to back that particular position up. Can you tell everybody a little bit about NCB Management and Management Services and what you guys do there?
Yeah, sure. NCB Management's been around since 1994. I've known Rick Silver and Ralph Liberio for a very long time. Great company. ARM industry leader that has from servicing, we can do from third party, first party servicing to debt purchasing. And also we have our subsidiary, which is P40 Financial, who does our ancillary refunds. So it's a great company, great bunch of people. And honestly, Adam, I wasn't really looking to leave, but I had an opportunity to join this company and I couldn't refuse it. It's just built with a lot of great people. And it's funny when you sit down and talk with folks, they're like, hey, I've been here 24 years. I've been here 25. And I'm like, I've been here 30 days, but it's people I've known. And that shows you a lot of the folks here have been here at NCB from the beginning. And it's a great company. So good ARM industry and one of the founders of the CRC. So Ralph was on that team that helps start the consortium. And that's good news for consumers. So that's the really nice thing here. But yeah, we do everything from auto to retail, credit card. We do it here. We have 4 sites in the U.S. And we have a near shore, so and in Jamaica. But 600 plus employees here, but a great management team. Yeah, it's bigger than what people think, right? But it does everything, like I said, from servicing. We do things with our subsidiary on the ancillary refund side. So pretty exciting stuff.
I'm familiar with P40 Financial and Shannon Rodden and his whole group, and kind of what they're doing to find the additional money left in the warranties and the auto notes and all that. Like I always found that to be a really cool type of service. Now for our conversation today, and since I have Charlie Bonner's attention for a period of time here, I'm going to ask the important questions. And so one of the things that you and I have talked about through the years is kind of this movement from that brick and mortar bank that we all know, like the JP Morgan Chases. And now we've got these FinTechs like a Mercury Financial and kind of like very different types of organizations. We don't have to talk about just those 2 companies in particular, but I'd like to get an understanding from your perspective about what's the real difference between the old school bank mentality and kind of this FinTech world that we're starting to live in today.
Sure. Yeah, I'll tell you a little bit about when I was at JP and any bank, right? When we were there, and you remember this, I remember back in the mid 2000s or so, when we did statements, everything was done on white glove service with FedEx. So it was a disc, one disc in a large truck. We spent a lot of money. Fast forward to today, now we can do everything PDF through secure portals and everything's great. So, and the nice thing is that, it's very structured on the bank side. You have X, Y, and Z's here, you have ABC here. You have a ton of people to help you, right? Fast forward to say back to 2017, whenever I was joined over, it was Credit Shop, now Mercury Financial. As a startup in a FinTech, you got to think about this. You have a lot of very smart people, right? They all understand everything from how to take everything without being a brick and mortar to making it cloud-based and do lending in a different platform, do X, Y, and Z. But when you start getting credit card involved, which they did through their purchase of the Barclays book, it becomes a game changer. So I can tell you right now, the first couple of days, I'm a suit, tie, kind of button down kind of guy. So I roll into work the first couple of days, and I was in the office in Wilmington, and I look around and I'm like, everybody's in shorts, t-shirts, they're playing ping pong. I'm like, what is going on here? Noontime, people are having other beverages outside of the normal, soda, right? So it really did take me back a little bit, but all these folks were talented and they worked hard. They worked 7 days a week. It didn't matter if they were playing ping pong. I had to get used to that a little bit because, I'm trying to, we're trying to build a recovery shop at the time, and, calling people like you say yourself or other debt buyers or agencies come work with us, and you hear ping pong in the background. So it took a little while for me to get adjusted to it. And one day, one of the guys stopped me and said, "Why are you wearing khakis and a button down every day?" I'm like, "I'm used to that. It's what I've done for the last 20 years." And so finally one day I did loosen up. I never wore shorts to work, but I did loosen up, start wearing like a golf shirt or even a t-shirt once in a great while. But that was the big difference, because you got to remember, you figure Mercury
The
was just
mentality
down the
difference.
street. Yeah, I mean, it was literally 4 blocks from where Chase was in Wilmington, right? And directly across from Barclays. So took me a while to get used to that mentality, right? I just had, and the look, I just wasn't used to. I needed to be in this kind of attire because that's what I was used to and how to work it. And then, lo and behold, here comes COVID, right? The pandemic hits. So, fast forward a little bit there. We've just then really in 2018 is when we launched that portfolio out to be on its own platform for Mercury. And then, a lot of folks come in new from big banks that had that same sticker shock I had, where you're like, whoa, you guys do this and that. But the biggest difference is, honestly, is you have the old school, which is folks who work in brick and mortar, versus the FinTech, who are going to be the ones who go out and really bring to the table stuff you didn't see in brick and mortar from a talent side.
Completely understood. And I think there's from a talent perspective, there's definitely some differentiators there, right? You're drawing from a different crowd that's got more of, I'm assuming, a technical background versus a financial background. That's not to say that those two things can't marry together, because finance, technology, FinTech, like let's not take it too far, right? But
right.
How did you, as you were kind of going through the process of building out a recovery shop from a FinTech perspective versus that, standard bank, what kind of are the strategies different? Are your channels different? What are kind of the differentiators on that recovery side, and how you're ultimately, let's say, treating the consumer, and how you're able to liquidate those things through various channels?
Yeah, the real big thing there was education, right? The first thing I did, Adam, was folks who never worked in the card side of the business. And this is all just making up numbers here. I would say, Adam, by building this, we sell this, we could generate $500,000 today for the company. They're like, wow. I said, yeah, because we're doing X, Y, and Z. So you start teaching them the business, just small. You don't go into a lot of detail, just give them, the regular basics, right? By you helping build this strategy on how accounts get placed out to be sold, you're actually part of generating X, Y, and Z revenue. And once you started putting that in perspective, they were like, oh, because remember, they're programmers. We build up business requirements, they go out and execute it, and then they're usually done. We did the same thing, worked together, built the requirements, and then showed them the end result. And we said, make sure you put it in your review, you created X, Y, and Z revenue, because without you, we couldn't have done it. So you make them part of the team. Yeah, it made them really part. It helped out a lot because a lot of the folks had no credit card experience. We also had a loan book we did there, and those sales were done pretty much started right before I got there, but we enhanced it, but really educate the team on what happens. That was the key thing there, and how to build it. We worked a lot on understanding the structure, on why an account hits a certain level, it has to go here, either placement or being sold. Why is that important? Well, here's why. If not, if you get stuck, never sold, we lose asset value there. So we just basically taught a lot of folks who never worked in our industry how important they are to us. But we did that through business requirements, testing, then having them a part of the team. And that was the big thing for them, because they've never done it before. They didn't know credit card like you and I know. They didn't know like what the end result was. They were more folks who give them requirements, go build it, and then they're done. we kept them going and be involved the whole way
Okay.
through the whole process. So
I've seen from my point of view, a lot of groups that in the fintech space, they seem to be more focused on that origination side, the lead buying, the origination, let's get loans through the door. And they haven't spent as much time looking at the backside. Now,
right,
when you're thinking about the tail end of that, and I think you were still at Chase when they started doing the online sale auctions and back when Chase was still selling. But did you find, between your experience on the brick and mortar side versus the fintech side, a heavier reliance on the technology departments? Meaning, I'm sure that, even when you were at Chase and if I'm not mistaken, you were there as documentation was becoming digital. So going
right,
from the
correct.
physical FedEx boxes that were showing up
Yes,
in trucks to a digital disc that was showing up with like a handcuffed guy to his
yeah,
briefcase type of deal.
exactly. It's the
Um,
truth.
I I remember that I was shocked
You
the
remember
first
it
time I
well.
saw stuff like that, and I was like, what's this guy got in this briefcase? Like a nuclear football? Like what's happening here?
Yeah, exactly.
But did you find that you had a higher reliance on the technology assets when you were on the fintech side because it wasn't built out? Because I feel like a lot of that stuff you built out on the banking side too. Like you were there during that time period of the digital
Right.
transition, we'll call it. But like, how did that look from your perspective?
Yeah, fintech, definitely, you hit it on the head. Fintech was a lot more, you built it from scratch. Literally, you built it
Okay.
from a file layout, honestly, Adam, to where it was name, address the whole way through, right? You
Okay.
had to build it from scratch. So at Chase, we had it built, we just enhanced it. We did
Okay.
different things through, maybe we look at this, give this transaction data, that X, Y, and Z, right? But on the fintech side, especially with the startup side, you had to literally build it from nothing.
You,
And then we worked with buyers. I mean, honestly, we worked with the buyers and we brought them in. And at one point, I waited probably 2 years until I brought in key buyers, large
Mhm.
buyers that I would bring in because we weren't able to support it. We just couldn't do all the media upfront as quick as they would want it, right? Within that,
Mhm.
say, a 30-day window, it'd be a little longer, right? And then at the point we got it all finished, where it is today, I think the team we have right now is very talented. They're
Mhm.
going to build it even better. And I think what's going to happen is they're still going to rely on IT because it's important, right? Because of the platform they have to work
Sure.
on, like anything, but at least there it's not starting from scratch. But I did rely, honestly, in my team, we relied heavily on IT. We had to build it for us.
I would think that so it doesn't seem like an unreasonable expectation, right? Like there's a lot of information technology that's going into that when you're building something from scratch. Did you find that the technology assets on the fintech side were able to move faster? Like, was there more bureaucracy on the bank side where things took longer, more people involved? Are there still too
Yeah.
many cooks in the kitchen when you get to fintech? I guess is really the question.
You know what? There's not that many cooks. Usually you're going to be
Okay.
the cook, right? In a sense. So there's not as much red tape you can move, but sometimes that can be harmful too.
Sure.
You don't have the right procedures in place and so forth. You got to make sure we had a great compliance team, still do over at Mercury, right? That
Mhm.
team, you know, knows what they're doing. They were very helpful. They worked as a partner. That was the key. It's kind of like here at NCB. They have the same thing. We work as a team. We talk about everything from Reg F to whatever, right? We work
Mhm.
as a group and what's the impacts. What happens is when you have groups that don't work like that, right? You've got to have IT involved, especially like with Reg F. If you're adding different fields, they got to go pull it from the mainframe, right? They got
Mhm.
to get from the system of record.
Mhm.
So you guess what? You're changing the business requirement, you're testing, you're doing this, X, Y, and Z. Now fast forward, I'm on the other side of the table. I'm the guy going, I need this, and I know it's there. Because if not, we can't collect it, right? We can't buy it.
Yes. Yeah.
So that's why fintech wise, not as much bureaucracy. Brick and mortar, it's been set up for a while. There's going to be different committees it goes through. There's approvals, there's change management, there's this, there's that. Understandable because you're looking at we're talking big companies, right?
Sure.
One mistake, it can be detrimental in a sense, right? Same with the fintech though.
We talk about organizations of very different scopes, right? And under different regulation because some of these fintechs are banks and some of them are not, right? And
Right.
and I've talked with a couple of people that came from the fintech space about how that transition has started to happen, but the reality is that there's quite a difference on the fintech side in terms of what regulations are ultimately required. You're not an FDIC
Mhm.
deposit
Right.
organization, right? Like you're just dealing with a
Right.
different level of stress. So I'm curious as to, I was curious how that all started to break down for you in terms of creating that separation and understanding those two different components. Now, as we move out of the kind of the technology piece and we think about asset sales on the whole, did you look at different criteria, or were you just weighting criteria differently when you were establishing values of a sale file?
We would run, the one thing I learned when I left the banking side is to run a good strat model, right?
Sure.
There's different ways around, this stuff around, straight rollers, state mix, all those normal things, right? So when we went down and built this, we wanted to make sure that we had all the right attributes, right? The file
Mhm.
layout's crucial. The data you provide is the data the buyer is going to analyze, score it, and so forth, and come back. So we really were able to, we were on a platform, right? That
Mhm.
we can get the system of records, any credit card platform, right? We could go ahead and pull in all this data. So that was the
Mhm.
key thing, is getting at, validating it, working with them. And it took a while. It wasn't just as easy as what people think. You push a button, it's there, right?
Mhm.
You got to go out and build it. You got to program it through the platform. You got to program it internally. And then what we do is we go out to market and test with buyers, say, hey, is this everything you need? The one thing we did learn and we knew was we need statements.
Mhm.
Applications aren't as prevalent. You know that, Adam. They're all done online now. You have where the pinpoint where the Google search came in and the FTP right down to the IP address. Um, and then of course you have your affidavits, right? Those are the key things. So where we did struggle though was statements, because statements were done by a third party. Because
Okay.
remember, we had a little bit of a break between us and then Barclays, who's the bank where we bought it from. They were still supporting that side. Once we took it over and we got to 12 months, 14 months, 2 years, we were able to start giving, statements within less than 30 days, because
Okay.
they were right there. So, but beforehand, we had to rely on a third party who was storing all of them off. So then we spent money on getting disk drives, believe it or not, secure hard drives, delivering them through a portal. It reminded me a little bit of the mid 2000s, late 2000s, right? But sometimes all you can do, you're setting it all up, right? You got to get that media to the buyer. It's important. And again, we were talking about compliance. I think that's where the team we have over that we had over Merck when I was there, very compliance driven. They can still put the big banking side of it in there to ensure we're protected. And they did a great job with that.
Okay.
Kudos to that team. And I was one of the first guys complaining, like, oh man, you're making me do this again. Now I got to do this. And I look back when I'm glad they did. It
Yeah.
made a lot of sense why.
It's a
But we
nice
work with
safety net
them.
too, right? Like
Yeah.
having a series of policies and procedures behind you to make sure that like any incident that comes up, exactly
Sure.
what to handle and how. But then you can
Yeah.
handle things on a team scalable size, which is also really
Sure.
interesting. I do have one more question for you, Charlie. And, I
Sure.
think for those that are on whether it be the banking or the fintech side, but they're on the lending side, then they come over to the debt buying side, or the agency side, right? Like they go from kind of the origination to the recovery sides of the world.
Mhm.
And that's got to be a big transition, and a transition that you've done more than once now.
Right.
Can you tell me a little bit about what that transition looks and feels like from your perspective?
You know, straight up with everybody is, at first it's a little nerve wracking. You're kind of like, oh, here we go. The first time was a lot more than the second, right?
Mhm.
The second and definitely hopefully my final one is I was very particular. Like there was, when I talked with Ralph and Greg Beer, I was kind of excited to do this jump because it's a great company, right? They do a
Sure.
plethora of things, right? There's so many services this company does. That's the key, is when you go over, if you leave banking and go to the other side of the business from agency or debt buyer, or even what you do, Adam, right? Make sure the tools are there. Make sure they're very compliant. Make sure they have a willingness ability, right, to the growth side of it. It's important. And they give you the tools and let you have that autonomy to do your job, right? And the key thing is, I remember I told people I was getting 500 emails a day. I'm a text and phone call guy. I am, believe it or not, because I've got so many emails, you can't find them. I'm
I get
still
it.
old school a little bit. I pick the phone up. I do, because text and email, or excuse me, text and voicemail was the way to go, because I got so many emails that would get
Mhm.
lost. When you're getting 400 or 500 a day, and you're working seven, it adds up, man. I mean, I remember at one point, the big joke was we'd sit in the office in Merck, and I'm like, hey, I got 12,000 unread emails. I mean, they
I,
just kept coming in,
I live
you
it.
know? You
I
know
live
how it
it.
is, man. You know it. And the same here, we just make sure we have different ways of saying, hey, look at this, and there's different code, right? Please read. It's important. But I think where it comes down to, anybody could honestly could do do the change, right? Does either vice versa. I've seen both ways. I've seen them leave from this side, from the debt buying agency side, go to banks, and it's
Sure.
worked well, and vice versa. I think it all comes down to, Adam, like you and I've talked before, around the respect side, treating people the same.
Yep.
Doesn't matter where you are. Doesn't matter. Treat them all the same. Be honest. Be truthful. That's the key thing here, and that's what I liked about the team here at NCB. They're just straightforward folks, good people, the same mentality in mind. And the same with the Mercury team I came from. They all want to get it done right.
Sure.
And that's the key. And really, like you and I have been friends for a long time. We may have not seen each other in a couple of years. When we see each other on RMAI after the pandemic, we're like, holy cow, it's good to see you again. You know,
Exactly.
it was fun, right? Was it not fun?
Well, we've been friends for, 15 years or so, because even when you were the big dog at the bank and I was just somebody's shadow, you still treated me like I was everybody else in the room. You always included me in the conversations, right? You always asked me questions. You always engaged with me. And I was just somebody else's shadow back then, which is fine. But that's why, but that's why our relationship has always been as strong as it has been. You can call me anytime, right? Like, because it is about creating those relationships, treating everybody equally, and making people feel comfortable, because then when changes happen, where transitions happen, you've got a whole group of people around you that are supporting you as an individual, not you, the person that was at that organization at that point in time, right? Like, we're trying not to be a fixed person at a fixed point in time, but to develop relationships around ourselves as individuals, and where we can kind of grow from that perspective. But now that you're back on this side, I get to see you more often at more conferences. We're going to spend some more time together, which I really look forward to.
Same.
And as you kind of continue to go through this process, I'd like to, learn a little bit more about what NCB is up to these days, and very much looking forward to chatting with you in the future. For those of you that are watching, if you have any additional questions that you'd like to ask us, feel free to leave them in the comments below, both on YouTube and here on LinkedIn. Charlie and I will both be happy to respond to any questions or comments that you have. If you have any additional topics that you'd like to see us cover, you can leave those in the comments below as well. Charlie, I really appreciate you taking the time to come on and chat with me today. I always enjoy an opportunity for us to spend a little bit of time together, even if it's virtually.
Yeah, thanks, Adam. I appreciate you inviting me on here. Good to see you as always, and keep up the good work with RMAI too.
Awesome. Thank you so much. For those of you that are watching, we'll see you again next week, and have a great week.